let's get started with an email query first. SS Verma has written in and he says that he owns a property that he bought on a home loan and then leased out. Now he says that he believes he can claim deduction on the principal and the interest payment on the loan, and his employer agrees with this. However, his CA says that the maximum deduction on interest paid as per section 24B cannot be more than 2 lakhs. He wants to know what is the specific provision under which the actual loss or profit on leased property bought under housing loan is chargeable against one's income.
So, Mr. Verma, there is a very popular misconception. There is an upper limit on the deduction of interest up to rupees 2 lakhs, which is applicable in case of self-occupied properties. This is not applicable when you lease out a property. Once you lease out the property and you get a rental income, there is no cap on the interest amount which you can claim it as a deduction. The second thing is that after 1st June 2016, you need to submit the details in Form 12BB, which will contain the name of the lender, address of the lender and his permanent account number, so that the interest amount can be verified. Also, it can be cross-checked. But there is no upper limit on the deduction. So under section 22, first of all, since you asked for specific provisions, the income from house property is taxed under section 22 and the deduction of interest is allowed under section 24 subsection B. The proviso which restricts the deduction to rupees 2 lakhs in case of self-occupied property is not applicable in case of leased out properties.
So when you say, Suresh, that on property that you lease out, there really is no limit on the exemption that you can claim against the interest. What do you exactly mean? Say if I'm paying 4 lakh rupees as interest in a year, can I claim the entire 4 lakh rupees as deduction irrespective of what rent am I getting, or is it dependent on the rent?
No, it is not dependent on the rent what you get. You can claim entire 4 lakhs. Of course, under the Income Tax Act, there is a provision that what is taxed is what rent you actually receive or the fair rental value, whichever is higher. So, in case the rent is really low as compared to the prevailing fair rental value, the tax authorities can substitute the fair rental value for that.
Okay. So, it's up to the tax authorities. Say, what if it is higher?
Yeah, so interest can be higher. There can be situation because, like for example, typically if you have borrowed 75 to 80% of the property value and you are paying interest at the rate of say 10%, and the rentals which you get these days is sometime even in the range of 6 to 8%. So it is quite possible that your interest payout is more than the rental income, and which is fine. So whatever loss you make on the income from house property, you can set off against your other income.
Okay.
Yeah.
So, technically what Suresh is trying to tell you here is that it is very prudent, in fact, from a tax point of view, if you have a second property which you have leased out, if you bought this on a home loan, because there is really no limit on how much deduction you can claim against the interest that you're paying on the home loan. So, theoretically, if you are paying 4 or 5 lakh rupees per annum as interest on that home loan, you can claim the entire thing as tax deduction.
You can watch live TV on our website mpnow.in. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.